Good morning, everyone. Welcome to another London session class on TopstepTV. Today, I'm going to focus on showing you how I set up my charts and what do all of those lines mean. I think it will be a pretty useful thing for everybody. Now, if you're here for the first time, welcome. My name is Deeyana Angelo, aka Market Stalker D. I've been trading for 18 years at this point, 13 years in futures, and I'm a Series 3 qualified trader. All right, so I've got a gold chart here that is pretty clear. So let's begin from the larger time frame. I never really start looking at like 2-minute charts, 100-tick charts. Why? Because there are things in this large time frame that you will not notice unless you look at the larger time frames where a lot of trading activity has happened in order to make the situation appear on the weekly and daily chart. So the first step that I do is to mark off any relevant areas of swing extremes. Now, I use a concept of supply and demand, which was taught to me by a trader friend back in 2007 when I first started messing around with trading. I was a total noob. If you didn't know, I come from the music world. I am a classically trained musician. However, I spent 20 years as a rock and pop musician. So even though I have been I have a couple of degrees in classical flute. I actually spent most of my rock and pop career playing alto sax and electric guitar. You can even find some videos of me online when I was doing various gigs for various artists. Most notably, I was actually a part of the Rod Stewart band for a couple of months, and you can find that as well. So I was a part of his brass section. So yeah, some tidbits. So I do not come from a financial world. In fact, when I declared to my mom that I'm going to be a trader, she laughed in my face. So, just tells you how my math skills were. But as it turned out, I actually do have a pretty analytical brain. And I think as a highly skilled musician, you have to. There's a lot of patterns in music that very nicely transferred onto what I did in trading. First and foremost, that is a methodical approach. Whenever you're raising your skill set, you can't just start from just clicking buttons, sitting down, or just kind of grabbing your instrument and randomly playing things, right? You have to have some sort of a plan. So, scales first, intervals, making sure that you have accuracy and precision before you move on to actually playing the musical pieces. That is something that I carried over into how I approached my trading skills. And this is the reason why I have some levels that might seem a little bit complex. However, you are looking at a culmination of someone who's been staring at the charts, tweaking their system for over 18 years, right? So with that in mind, I see that on the weekly charts, first and foremost, we have some sort of a topping pattern here. Whether that's going to stay or not, it depends on obviously headline risk and a whole bunch of other things. But the main thing is that we do have some trouble going above 29.75.3. Now, this bearish engulfing that you see from the last week's trading, that's not a finished supply. However, it could be a beginning of a new swing high. And that's all it is at this point. Just a curiosity that we weren't able to go to the 3K area that everybody's gunning for. Now, obviously, we have an uptrend in force. Why do I say that? Well, because every time we create a supply, eventually we smash through it, create a new demand, and then carry on. So the first thing that I'm going to do here is to grab a couple of rectangles. And I have a whole software development company that does this part for me automatically. It is an indicator, and we're kind of creating it for Ninja at the moment. Right now, it's just on AMP MetaTrader 5. But basically, here is the nearest demand area, is down here. So long way off, but something to put on your charts, right? If we ever get down there, that will be an excellent point to either look for a further swing upside or to look for a break. So immediately it is giving you a piece of information that we may have an area of orientation for either continuing uptrend or for a change of a trend. Why? Because if you break this big demand on the weekly chart, that tends to mean change in sentiment. Okay. Now I'm also going to put another rectangle up here just in case that we do end up creating this supply. How will I know? Whitney Houston, how will I know? So I will know by the fact that we exit this supply. So right now we're still inside it. So it's not really a supply, right? It's just maybe a distribution. And we may find some more information as we start kind of dropping through the time frames. But for now, that's what we have. We have a distributing area. We're not able to go higher. That can change at any point because it's not a relevant supply just yet, but it is a curiosity and something to note. We're unable to go higher. So now that that part is done, I start dropping down to the next time frame, and that's the daily chart. Now the daily chart is going to give you sometimes a bit of a different information and new areas. So usually I like to use a multi-time frame supply and demand indicator. So I will not see these unless I switch on the multi-time frames because I want to focus on the daily chart. And with that in mind, so what do we have here? Here we actually have a supply that was already created. So now we can zoom in and say that this is the supply, which is relevant, right? It's relevant. Why? Because we already created a swing away from it. So we distributed, bearish engulfing, we exited this entire area and then moved away from it. What is the implication for these areas? The main implication is that upon a first test, we will have a reaction. Whatever happens after that on the second, third test, that's another thing altogether. But the core idea is that as it stands, on the first test, we would expect some selling to come in. Again, if it doesn't, again, it gives you another piece of information, right? It gives you the information that the supplies are still not in control and that all supplies will be broken in a strong uptrend, okay? From Zero to Here says, can you check S&P 500 too? S&P 500 is not really my core market. I do look at it because I trade DAX quite a lot during London, and that's in a similar precarious situation. But let's just concentrate on gold because I know, first of all, gold is one of my main markets. Second of all, gold is something that a lot of people trade at Topstep. And three, I don't call myself an ES trader. Do I sometimes trade ES? Yes, I do. But would I start my day by, let's see what ES is doing? Absolutely not, because it's not, it's not that important to me. I will use ES options levels to see what DAX might want to do. It's one of those things. If you're not an expert in a particular market, that's absolutely fine. We see many people who are only NQ, like nothing else exists, just NQ. Should they be looking at ES? Yeah, probably. Do they? Most don't, which is where some of the issues come from. All right, let's continue. Now, on this daily chart, we actually have a visible demand area as well that we created over the last 3 days. So here it is. I'm going to mark it. Where is that? Price-wise, 28.90, let's say. Maybe a little bit lower than that, but 28.90. So what do we have? Well, we have a wedged in level, right? So we have 29.48.9 as the proximal edge of a potential supply where we might see some sellers. And we have the edge of a demand at 28.90 where we might see some buyers. Now that's just the edge. Sometimes it touches it and just goes, that proximal edge. However, sometimes it will go deeper into it before it turns around. So just plopping in these levels on the daily chart and expecting that you're going to trade the intraday from them, that's the wrong approach, because you don't see the open sentiment, you don't see anything else, you just see, general massive levels that would be not that good for basically any sort of intraday trading, because the stop losses needed would be too large, and therefore that will mess with your risk reward. So there is a lot more to it. I'm kind of surprised that more people don't look at larger time frames, to be honest. Paul H says, and why is that an area of demand? It's just because we created some sort of a reversal, market state change, and then we moved away from it. So that is a demand, right? That is what you're looking for. If we were still, let's say, up here in this potential supply, and the market is not exiting it, it's just like consolidating in the same area, that's not a valid level yet. That's why I said on the weekly chart, it's not a level just yet. It might be, but it will be known only once we exit the entire consolidation area. Sometimes it's a 2-bar reversal, other times you have a number of candles before it actually decides what they want to do with it. However, anytime anything starts distributing or accumulating, so meaning we dropped, then we accumulate, or we went up, then we distribute, it means that you're in danger of either liquidation from supplies or a markup from the accumulation. So I don't actually like the whole markup distribution, because people get a bit confused. So I call them phase 1 and phase 3. And then whenever we move into any sort of a trending move, it's phase 2 and phase 4. In my head, that's much easier to sift out what the hell you're trying to do. And obviously the supply and demands have their own concept. There's the case for a quality of a demand, which looks at like 6 or 7 different conditions. In my methodology is about 7 conditions. But basically you would be looking for how the market left the area. Was it flimsy? Did it come back to it immediately? And how far away did we move? So one could argue that this supply here, because we haven't moved away that much from it, that it's not a high quality supply. Therefore, it might only bring us a little bit of a pop in there and then carry on pushing through it. How the price behaves around these levels is crucial. So it's not enough just to have a supply and demand and, support resistance and go, oh yeah, I'm just going to become a seller up here, buyer up here, and we're done. There's more to it, okay? If the market is not, I wish it was that simple, right? If the market is not reacting to the supply, or it reacted very, very briefly, but then came back to it, that usually means that that area is probably not going to hold for much longer, or that they may be working from a lower time frame, because you can see which time frames are in control. Even though these areas are visible on nearly every time frame, there are days when the sort of small time frame participants are in control, in which case you will see deeper tests of these levels. Now, while I'm on the daily chart, I also like to compare to see what is going on with the visible volume profile. Here it is, and I like to look at a 4 weeks worth. So basically roughly a month of whatever happened. So let's just move that over here. I prefer to do this as a fixed range, but it's a little bit tricky doing that. So one workaround here would be to just go roughly from the end of January. There we go. And then to see where the point of control is on the volume profile and whether there are any high and low volume nodes. So what are those? Very simply, low volume areas are areas where the market moved pretty quickly, which means that it didn't hang around there too much and it just went, okay? Areas where you have a lot of bunched up volume, they can be looked at areas that you don't expect the market to move very quickly because there's so much volume in it and differing views of what should happen there. As you can see, this entire area, as seen on the weekly chart, is one big volume node, high volume node. So what does that tell us? Well, it tells us that we're probably not going to slice through it in one day, but that it's very likely we're going to spend some time here. Now, if we get all the way up to the supply with the current prevailing trend and we start spending even more time whilst going higher and higher, that's the point where I would expect to see those 3Ks come in, right? Now, on this volume profile, you can also see that we're coming up to the volume profile point of control. What's a point of control? It's nothing more than the widest point of the profile. Now, when I look at point of control from more intraday timeframes, like market profile, that only looks at regular trading hours for the given session, that has a different connotation for me, okay? Volume profile can be a good starting point for larger movement on obviously 4 weeks worth of volume, but intraday profiles and POCs, I find that I want to be away from the POC. So in effect, I will use intraday POCs as targets, but I'm not going to use the volume profile necessarily as a target. It can be a good starting point. Why the difference? Because volume profile on large time frames has a lot more trading information in it, whereas intraday profiles basically are middle of the middle. That's what the point of control is. Okay, so what's made you tighten the rectangle of the demand? I think you mean the supply, because we started with a weekly chart. Because of the way it looks on the daily. So I started with a massive time frame where we are distributing, and again, you can see that on the volume profile. However, when I dropped down to the daily, I could see that actually they came from a little bit higher up. This is what multi-time frame analysis does for you. It makes you find zoomed in levels. That's the whole point of it. You look at the bird's eye view, then we drop down, then you kind of refine those areas. It's like, where are they? You can do the same thing with a 4-hour time frame too. Now, once we get down to the intraday time frames, like 30 minutes and below, I don't really put much stock into supply and demand for a couple of reasons. You don't see open sentiment. You have no idea whether we're inside the distribution curve or outside of it. So it just doesn't provide you anything more than here's a swing high, there was a swing low, the end, right? I want more out of my intraday sentiment. So this is where the market profile, TPOs, the value areas from the previous day's trading come in. This is where my statistical averages come in, and that's also where the options levels come in. But one thing that I like to hold on my charts at all times is just pure volume. And here it is, so I'm going to plop that on. Now you have just volumes. Now this is a daily chart, so it's massive. And you know, you're going to have one day doing one thing, another day doing the other thing. However, overall, what is going on with the moving average of the volume, which is a little blue line. I'm not sure how visible that's going to be here, and I'm hiding it. So little blue line, right? Generally, volume is kept pretty consistent, and we are slightly above the moving average of the volume. So, you know, it's decent volume, right? Okay, let's just have a look at the 4-hour chart now and see whether we can find even more zoomed in levels. And sure enough, we can see one up here. Now, some people are getting involved in overnight levels and then going, well, this is maybe another supply. The problem with that is that when you're looking at the market that hasn't done much overnight, because here's Asia, this is one candle, second candle, third candle. When it's flat, it means that the activity overnight was not that great. So I would consider that out of hours. Now, if we have a trending move, obviously you can take those levels and actually use them during the COMEX trading hours. But generally, just generally, if something is not moving for a particular particular session, it means that there are no active participants with big enough positions to move the markets to any relevant levels. So I will take them with a pinch of salt. Therefore, for me, this whole consolidation, the distribution area, is nothing more than a speed bump after hours. So that immediately weakens it. The chart location in the overall swing, so we have the swing high up here, swing low up here. It's just middle of nowhere. Now let's also tighten this demand area from this euro close reversal that we had yesterday. And now you have sort of like pegged points, right? You know that there's a supply up at 29.62. You know that there's a demand zoomed in into the 4-hour chart just below 2900s. And where are you? Where are we right now? We're kind of in the top third of this, right? Top third. So it's like, not a great chart location, right? Because we're in the middle of a swing. And this, at this point, 4-hour chart is not telling me anything else, right? We are done with the larger time frames. Now, I usually keep the 4-hour supply and demands as I start to go into my intraday analysis. We don't yet have the TPOs on Topstep. So I will be dragging those levels out from my other charting package. And another thing, so first thing that I want to talk about when you're looking at intraday movement. So now we did the large time frames. Let's see what's going on. First and foremost, I like to put Globex VWAP onto my chart as a very basic alternative to any sort of moving averages and stuff. I prefer VWAP over moving average if I'm looking at it to react as a level. Okay, I do use moving averages for something else, and we'll get to it in a minute. However, VWAP from Globex can tell you pretty quickly how we are doing. Okay, are we above it? Are we below it? Are we flat? Are we just hanging around VWAP? Immediately today, you can see that the market is pretty reactive to the upside from Globex VWAP. Okay, now that tells me that there are some buyers in here, and there are some caveats in the profile that means I need to wait for a better time of day for this. However, for now, we're above VWAP, so the sentiment is slightly skewed upside. We know that we have a supply all the way up here, and another thing I like to mark is the Asia high. So where was Asia high? That's the first line that you're going to put. You can even do Asia high, Asia low, right? So right now, Asia high is more relevant. And I will mark that exactly like that. Now here's that Frankie fake out that London does quite a lot. But on gold, I never find that that reliable, but it does happen, you know, across the board. You can have this thing called the Frankfurt fake out. So Frankfurt exchange opens up a whole hour before London, and it's a small exchange, right? It doesn't really have much volume, and usually they try to take it somewhere, and then once London steps in, at some point in the first sort of 90 minutes, they like to go through the Asia high or Asia low and reverse it. Now, it's a scalp. It's not a big swing trade, right? It's literally just an intraday grab of market makers going, well, what's the nearest level where we have the most stops? And they know that. You know, market makers are typically range traders. You know, they are just looking at the nearest obvious mechanical levels to take them out so that they can make some money. And generate liquidity for the rest of us. So how do they do that? They look at the nearest levels, they take them out, and then they do the same thing, right? So having Asia high and Asia low on your charts. So let's also do Asia low. Because the same thing happens later on in the day as well. So Asia low. This is all intraday, right? So what is the implication after the Frankfurt fake out has happened? Nothing, right? So at this point of the day, you're not going to get, you're likely not going to get that much movement from that setup. However, if we fall all the way down to Asia low, and let's say we're sometime during COMEX, the initial balance is over, and then they kind of smash through it and then reverse. Now that time of day is more relevant for gold because you can get a reversal into the euro close. Now when I say euro close, I mean any period from about 9 a.m. Central into and up to the sort of New York lunchtime, which is 11 a.m. Central. In my time, that will be, I know that there's some people in the UK, so that will be from after 3 p.m. all the way up to 5 p.m. That's kind of the time period when I look for my setups in gold. And usually you can have pretty good setups in platinum and copper and crude oil and even in equities as well. You know, you can get that reversal into euro close. We've seen it yesterday in equities. It was absolutely horrendously fierce, and it just kept going. So, you know, knowing these times of day when certain events can bring reversals, that can actually help you a lot. Now, London doesn't quite have the same thing. So it's not like we have something happening around, you know, let's say 11 o'clock my time, and then like everybody plows in. However, for the New York session, we do have something called the Forex option expiry, which is happens nearly every day. Well, it happens every day. And it's called the New York cut, NY cut. Now that sounds like, oh, why would we care about Forex? It's because Forex has a connection with certain products, and you know, these days we're seeing that more and more across the board, but it was always a thing, right? So after 9 a.m. Central, I'm trying to get my time zones correct, after 9 a.m. Central, so that's the New York cut, 9 a.m. Central, you will typically see a large amount of volume come through, and then whatever they want to do, usually there's a reversal, right? So, of some sort. Now, yeah, sometimes it's a continuation as well, but as a high statistical probability, reversals in especially my products are very, very sensitive to the NY cut option expiry. So if you know that, and if you know that my setups usually work out at that time of day pretty nicely, you will then have the time of day with a certain anticipative move, right? So what do I expect from this time of day? It sort of prevents that bumbling around. It's like, is it going to go up? Is it going to go down? Now, London, like I said, is a little bit tougher because it doesn't really have that. You have the Frankie fake outs and then pretty much nothing up until the NY cut comes along. So knowing that, you already have a couple of ideas of how you can structure your day. So rather than going, oh my God, what do I do now? It's moving, I must get in. You now have a couple of frameworks, systematic frameworks to work from. Yeah. Now let's carry on. What's going on with DAX? DAX is just following equities. So it's obviously more reactive during this time of day. There's DAX. We can have a look at it once I set up this chart. But yeah, DAX is heading for the all-time high. So yeah, we'll see whether we find any setups in there later on. Yesterday I had a pretty decent day. I didn't catch the entirety of the downside move, or I didn't catch the reversal. I was on the downside. I did manage to get 136 ticks out of it. So, made a couple grand out of DAX. Pretty happy with that. These sort of days where things just go one way, and then, they might reverse, but generally for the majority of the day yesterday, DAX was just going down. I'm very careful with them because I'm not particularly good at those sorts of days. So anytime I see that happening, I'm like, oh, can I get in on a short, and does this actually make any sense? And then if if I try a couple of times and both times fail, I will actually step away and go, okay, too rich for me, don't know what's going on, can't get any good trades, But yesterday, as it turned out, The short was pretty obvious, and I did manage to get into a trade on a 55 tick, so it wasn't, it was a big stop loss for DAX. So 55 ticks, and I was only in with like two contracts on the mini side, so I didn't use full DAX precisely because I know that those sorts of days are not my strongest. And I ended up making the cash. And then I kissed the ground I walk on and carried on. So copper was torturing me all throughout the London session yesterday. Managed to recoup some losses during the New York time. So it was a very, very challenging day. But generally, if I had stuck away from London and only traded copper for New York, I would have been better off. However, it was okay because, like I said, I made money on DAX, so it's fine. DAX is my main London product, so I've said this many times. I find that some of the products that we have on Topstep, they don't even start properly moving until 11 o'clock my time, which is not for another hour. And then I would typically start a trade and then run it for about 3 or 4 hours. With a caveat that if I'm not really in much profit at the COMEX Open, if I'm trading COMEX products, then I will cut it off and then look for another setup. So there's, there are kind of things that I pay attention to. All right, let's carry on with the value areas, which is the next thing that you will see on my charts. Sticking on the 30-minute chart still, L-Par says the 84 tick move from Asia high to VWAP is a scalp for you. Yes, because on a product that moves 415 ticks, a move, I don't consider scalps in ticks. I consider scalps in how long they're going to last me. I don't give a crap how many ticks it's going to give. But yeah, if you have something moving 415 ticks in a day, grabbing, a small portion of that, tiniest portion of that, is actually not considered a swing move, is it? So a swing move would mean that you capture 250, 300 ticks. So you capture a good chunk of that day. If you're capturing a tiniest amount of that move, 84 ticks, which you probably won't be able to capture full 84 ticks, you will probably realistically capture 50. So you're capturing, just over a tenth of the move. Like, is that not a scalp for you? I'll really be interested in what is a scalp for you. But for me, a scalp is defined as the time that you hold the scalp for. And you can't hold this for too long. You can hold it maximum. Like, you first have to wait for it to smash through the high. Then you have to wait for them to step in and reverse. So already you're not trading the full 30 minutes of whatever's happening here. And you might actually catch it maybe once you come back into the range, because you have to make sure that they're not pushing it higher. So what are you catching? You're catching maybe 40 to 50 ticks in a 400 tick product as an average range. Is that not a scalp? Like, what is a scalp for you? Just capturing 4 ticks? Doesn't matter that it moves 400s or 1500s? We have to put things in perspective, people. Okay, so a scalp on NQ for me would be capturing 30 points. 30 points on NQ is 120 ticks. But it's still a scalp. Why? Because the bloody thing moves over 1,500 ticks in a day. It's still a scalp, right? So make your definitions a little bit more systematic, please, when we're talking about scalps versus swings. For me, a good move on gold would be, like a swing move that I would be looking for, would be at least 200 ticks. At least 200 ticks, maybe more, okay? That means you're capturing a good chunk of the move for the day, not just 40 and 50 ticks. So to me, scalp is not defined by the number of tickage necessarily, but also the time that it takes to do that. So if you have one candle that spans 80 ticks, and actually during COMEX, candles span, well, let's have a look at it. So here was COMEX. One candle, 90 ticks. Another candle, 163 ticks. Another 30-minute candle, 127. Capturing 40 or 50 ticks when you have that sort of movement, yes, it is absolutely a scalp, because you're not catching a swing across 3 hours. You're capturing the tiniest portion of the move, okay? All right, so value areas. Now for today, I'm going to look at, you know what, let's focus on COMEX values, because I'm not going to be here later on. Well, I will, but I will be on Back to the Futures when gold is closed. So let's have a look at where the COMEX values are. Never mind London, okay? Value high is 29.29.4. So that is the next thing you will see on my chart as a purple line. I like to delineate my my sort of levels into different colors, because it makes me know what the hell they are. So this is the value high for COMEX. And then the value low is 29.17.3. There we go. What is this? It's the value area, the distribution curve that we created yesterday during COMEX, right? It only comprises the RTH, regular trading hours, for COMEX. What is the implication of this? Why would I even have this on my chart? Because it can provide you with something called the open sentiment. Now, we are in London, so those have different values, but I'm just going to talk about, you know, the future. I'm going to talk about COMEX. If we open inside this entire area, that will mean that the market is in balance. And that carries some very different connotations than if we were to open above it, and how far above it. So there's immediately some odds connected to where we are opening in relation to the previous day business. That's what it was, right? Just need a sip of caffeine for a second. All right. So it stands to reason that if we get to COMEX and you are opening below 29.29.4, you're looking at a market imbalance. Unless that changes very quickly, like they kind of push upside fast and furious, I would be very careful with any sort of trending moves, because the stats around opening inside value mean that about 60% of days that open inside value end up as range-bound days. So instead of going, oh, I wonder what they're going to do today, you immediately go, wow, okay, open inside value, 60% of range-bound day. Let's be careful. You know how Hogue says, we're opening in range, better trading locations will come along. I need to do it in a Hogue voice. Better trading locations will come later on in the day. Why do you think he says that? Because he made it up, just decides that, he's the oracle and he can see it. No, it's because we're opening in balance. We're opening in yesterday's business. It means that the prices where they're at right now are being accepted. We're in agreement that this is where we should be today. Okay? There are exceptions to that, as always, because anything can happen, ACH. But basically, the whole point is for you to immediately have stats connected to the open sentiment. If we are to open slightly above, like let's say we pop upside during the overlap, and now we're sitting, somewhere at 29.35, that is actually the ideal conditions for continuation move. So not necessarily, let's go back to value. That can happen as well. Obviously, like I said, ACH, right? However, if it opens as a mild imbalance above the value area today, that will provide us with quite some good conditions to keep going higher. So it's like educated guesswork based on the probabilities of the open sentiment. Immediately, you're not going, oh, I wonder if gold is going to go down or up now. I mean, I suppose this might go up, but, we don't know. Now, let's say that we have some sort of a release and, Trump opens his mouth and gold goes insane because, headline risk. So now we're opening over 1% of distance of value high, way outside, There is a caveat there that if we open above 1%, there's very small chance that we're actually going to go all the way back down to value. They might try it, but they might fail. So those sorts of opens are actually not the best for continuation moves. They are best when, they're better when you're basically opening with a slight gap. Typically, from about 0.4% distance up to 1% is when you will see either a continuation or first, again, this is where hypos come in, or first maybe a test of value, although that is more likely to happen if you're opening somewhere in the vicinity of value with just enough space to test the edge of the distribution curve. Why? Because the test of a distribution curve from the previous day's trading is a high probability setup, right? Now, if we open below value, this smashes down. You can look for a fade. If we opened below value, you can look for Asia low fade, then a continuation. Okay, that's one possibility. But it all depends where we're going to be at the time, right? So you have about 3 or 4 hypos that you can really quite accurately anticipate. So it's not guesswork. It is. Well, I mean, I suppose it is guesswork, but it's guesswork based on probabilities of the day type, right? How are we opening, where are we opening, and how far? Those are the 3 main points. So that's what the value area is for myself in particular. Now, moving on to some parts that are specific to me. And that is the average daily ranges and average session ranges. So ADR and ASR, which is something you will see on my charts. As projected algorithmic ranges of what we've had over the last sort of 10 to 14 days, and then using them as levels rather than just using them as a measure of volatility. Most of you would have seen the ATR, but that's not really a level. That's an entirely different measure. Similar, but different. So let's put on the ATR. Now you can see down here, ATR now has a line. I'm just going to move this. So I need to do this because you can't see it from me. So I'm just going to do this so that you can see. ATR over the last 14 periods says 5.5 points. That's 55 ticks. That's an entirely different thing. It measures the last 14 30-minute candles, and it will change with the time frame. So if you drop down to 5 minutes, it's going to give you 20 ticks, right? But I always use 30 ticks as my benchmark. And it tells me that on gold, I really have to use at least a 55 tick stop in order for me to fish for swing trades. If you use really tiny stop losses, you are expected to not hold those trades for very long because they don't have a stop loss large enough to be less sensitive to the volatility and the nonsense that we can have intraday. So that's one use of it, and that's the normal usage. Now, I have a different measure. So I like to have a look at the last 10 days. So I use 24 hours for the average daily range, and then also the RTH, so just the portion that I'm trading. I know that there was a question, do you find legs in splitting market profile into 3 sessions? Yes, Edward, I definitely do. I do not mix and match, and in fact, that doesn't work particularly well. It might work on volume profile if you have like several weeks worth, like 2, 3, 4 weeks, but mixing and matching all 3 sessions into smushing them into one it won't give you that much information unless you're in some kind of a bracket, so consolidating market over a long period of time. So then, it can show you whether you're above the values or below in general. I definitely split my my sessions into 3. So I don't trade Asia very often. I do trade London, but I will have a specific value area for London and specific value area for New York, okay? So yeah, let's go back to average daily ranges. Average daily range, I consider the overall 24 hours. And that can be a reference for COMEX as well. As we get into COMEX, my average session ranges, however, will not be available until we know the starting point. The starting point would be COMEX open. But the average daily range, which you will see on my charts, the low is at 28.92.3. So let's put that on. Wrong button. There it is. These bright lights are a little bit bright, so there we go. So 29, what did I say? 28.92.3. Okay, 28.92.3. Oops. What? Don't know what happened there. Now I like to delineate this so that everybody's clear on what I'm looking at. And then for the ADR low, I put it in green because at that point we will exhaust the entirety of the downside area, the downside move statistically. It's not like, oh yeah, this will happen every day. It will happen a lot where we get somewhere to the 24 ADR low and then either start to consolidate or just reverse immediately. But usually there's a little bit of time that you can have to actually decide if they're stopping at ADR low. Now, ADR low, if it gets ignored, and if, let's say, they get there, they consolidate, then they go lower, let's say you have some kind of an unwinding day, liquidation day, and it goes lower, goes through it, and it doesn't reclaim the 24 ADR low within like sort of an hour, you can then use this line almost as a backtest level for further downside. So because it usually consolidates or something, it creates like an intraday supply. And same thing if you get up to the ADR high, which is currently located at 29.54. So 29.54. I'm going to use red for that. So what does this tell us? Well, it tells us that, is that English? I'm not sure. It tells us that there is an expected move up to a certain area, right? So I use those ADRs as levels rather than just measures of volatility, which I also do. I use them as, oh, how much do we move and what should my stop loss be? So rather than just using the ATR, which can mix and match sessions, so I'm not particularly happy using that, especially in the beginning of the session, because we don't yet know how much movement we're going to have. You can use it on a lower time frame as an ATR, but I prefer to use the previous 10 days and then figure out what my stops should be. But my primary use for these is to figure out whether my trade has any space left and whether we are in a normal day that will respect the statistical averages or whether we're just going to smash through them and keep going. So again, it gives you a framework from which to work off of. It's not like, oh, I'm guessing it's going to go up. Well, if we're already up here at 29.54, and actually it happened yesterday, there's no backtest mode on Topstep, but I can show you this yesterday. So if I go back in time and get to this area, so here was the 24-hour exhaustion. So on my indicator, I have the dashes that then the dots, then that turn into dashes when the average daily range is exhausted. Now, gold will overshoot it, but like I said, it needs to reclaim it and then to start doing things. So there's always a bit of a slowdown, so I never kind of rush into shorts there. I always kind of wait for it to develop, and that can take an hour, it can take a couple of hours, and it depends what time you hit them as well. So we hit this in the overlap period, and then obviously we have the new session starting, and guess what? It starts to reverse. Where did it happen? Within the zone of ADR. And remember, when I say one number, it is always going to be a zone. It's not going to be just like, yes, we get to 29.54, that's the line, done. It's always like a 30 to 50 tick area, rough zone around the level where you're looking for reactions. And then once they ignore it, that becomes pretty obvious. If they create another supply, so they react to it and they start rolling over to the other side, that is a sign that the level is reclaimed and active. Okay, so that's what happened yesterday, and I was discussing this with one of my VIPs, and we were looking at 29.30 as a potential area for a break or or a further upside, kind of like line in the sand. Interestingly enough, there was also Hoag's weekly kickoff level, but just so happened that I had a confluence there with Hoag's levels at the ADR high. Now, let's have a look at what happened with a SR, which is the average session range that's calculated from just the regular trading hours. And like I said, that won't be available for the New York session until much later on. So those are the blue lines, the blue little dashed dotted lines. So this is a backtest. So this is how you would have looked. This is how the chart would have looked yesterday as you were staring at it. So you had the ASR high at 29.41.3, and you had the ASR low at 29.10.6. So let's push this a little bit forward. There it is. So now it's exhausted. Interesting, right? We hit it right after 9 a.m. Central, which is 3 p.m. my time. Reversed into Euro close, and then kept going back to initial bounce high, initial bounce low. Is this an accident? No, this is a statistically normal day. So let's have a look at where the London average session range is. However, just note that once we get to New York, the ASR levels will be very different. So these particular levels are session specific. So the ASR low, London low, is 29.15.7. Remember, these are projected ranges. They're not like, random numbers that I'm pulling out of my behind. 29.15.7. That's the average session range London low. So ASR London low. They're dynamically calculated. They're not, they're not just, let's take half from here and half from there and then put half of them there. That's the fixed range, right? These will be looking at where the current day's high is and projecting it to a degree, right? So you still have a certain range, but if it starts to go into a crazy movement, obviously we have an entirely different situation then. And again, a framework for seeing whether we are in an abnormal day, which will keep you out of trouble, trying to fish for reversals when we've smashed through all of the statistical levels. Okay, the ASR high for London is 29.42.5. So let's put that on the chart as well. And we're going to use red because at that point we would expect some selling to happen, okay? As you can see right now, we're pretty far away from all of these, and we're just kind of moving inside the value from yesterday. going to VWAP, bouncing from VWAP, heading back to VWAP. This is the nature of a balanced day, which we have on the London session. Now, finally, I also have another part of the profile, which is basically the initial balance areas, and that is very, very specific to the current session. I don't really put too much stock in previous day initial balance unless you're trading equities that tend to have like a spike, late day spike could be a thing that is a Dalton concept. That is less reliable in some of my instruments. So, let's say that we had some kind of a rally into crude oil settlement, and then I'm looking at it the next day. Generally, it won't be relevant because Asia also trades it. So a lot of the times that will be already done by the time that I get to it. So yeah, that's more specific for equities. Dalton is a ES specific trader, so he knows that market very well. But yeah, so what can we look for when we are looking at the initial balance? Initial balance is the first hour of any active trading session that you have currently. So for London, that will be my 8 a.m. till 9 a.m. and I don't like trading during those times. So you will see me put a rectangle. And for this one, I'm not going to extend it. I am going to just keep it as it is. So that is the initial balance high, initial balance low. And as you can see today, we've actually extended it to both sides. So for London, we had the open inside value and we had extensions of the market both sides. What does that tell me? It tells me that this thing is not doing anything. So you can do scalping from the edges of the initial balance and breaks of the session lows and highs back to the middle. But for me, there's no swing here. So it's like clear as day that I don't want to get involved in whilst the situation is like this. If we were in COMEX and this range was a bit bigger rather than just spanning, 80 ticks or whatever, maybe if we span like 150 ticks from the session high to session low, ideally 180, there will be a nice opportunity to scalp both sides of that, but not on this range. So for me, until we get to some more relevant areas, somewhere up here, even maybe closer to those weekly and daily supplies that we had. This is a 4-hour supply, but I do know that there's one visible up here as well. That might be a better choice for me. Or if we fall down to these levels, so somewhere near Asia low, and then maybe breaking all of these and then reversing. But if we fall all the way down to the 24 ADR low at the right time of day, that will definitely be a sign for me to turn into a buyer and look at things, maybe reversing. So yeah. Now, the final thing that I like to use on my charts as a very important orientation level is, of course, Mentor Q levels, which is the options chain. Why do we look at those? Is because in recent years, especially since COVID, we've had options activities, more specifically zero DTEs, comprising for a lot more volume than it used to comprise. So before, you would look at an options level, and sometimes in original, Forex and Y-cut concepts, I would look at the largest option and then use that as a potential magnet. And that's basically the thing that I do now. But it's a little bit different because now we have companies such as MentorQ that gives us smaller gamma exposure levels on the way to the big levels, right? So that's what you will see as GEX 1 through 10. Usually I like to look at GEX 1 to 3. Don't really put too much stock in like GEX 10 and GEX 9 unless there's nothing else. We're in a very quiet day. And, I have literally no other areas to fall back on. So the first thing that I would look for in options chain would be where the largest calls and puts are. And those are also sometimes representing the gamma walls that Anne-Marie and myself talk about. So today on gold, we do have a gamma wall at 29.15 as a pretty major area. Now, I like to mark these as white solid lines. So I'm going to say gamma wall, and this is 0 DTEs. We also have some pretty interesting number of calls there. So they're expecting it to go higher. However, if we go down to my average London low, again, I immediately already knew that that was my area of interest because that's where the Asia low is. That's where the value low for COMEX is. So is it an accident that we suddenly have a gamma wall there the next day? I would say not, because those are all areas that people look for. Markets are very mechanical, and everything that I'm doing here is literally just pointing out the most obvious mechanical levels. And I know that sometimes if you just tune into my stream and you see all of this on the chart, you're like, what is all of this stuff? But hopefully me breaking it down for you in this way, you will start to understand that everything on my chart has its place because I trade very systematically, you know. So let's have a look at some of the other areas from the options chain. We have GEX1 at 29.50. So somewhere up here, all the way up here. And lo and behold, they also have the projected range from the options activity yesterday at the same area too. So that is not too far from my zone. It is actually within the 50 tick zone from my ADR high. So they're very, very similar. Very, very similar. And it carries the same, the projected one-day max from the options activity, it carries the same implication as my ADR high. You expect slowdown and eventual reversal. It basically tells you how much space you have up there. Sometimes GEX1 will be on its own and we will have it somewhere nearby. Today we have GEX3, which can also be reactive and has been right above VWAP, which is 29.25. So basically all I'm looking for here is confluences with the levels that I already have and seeing where the market makers might get involved. Okay, that gives me more confidence that those levels will be more relevant. So you effectively pull things from 4 different concepts: larger time frames, lower time frames, profile, options, and then put them together and just look for reactions around them. If you're a new trader, this would probably just go way over your head and just going, huh? What? But it takes time. This is a skill. It's like learning a language. I've said it, you know, before. First time that you hear somebody speaking in a foreign language, you'll be like, that's just gibberish. Like, that's just like, I have no idea what is going on. Just like, blah, blah, blah. It's like Simlish, if you ever played Sims, the game. Foreign language at first sounds Simlish. You have no concept of what the hell's going on. But then as you slowly learn a phrase here and there, then you're like, oh, that means that. You connect meaning to it. Same thing with trading. If you start using the market stalkers method, as I do, you will start to connect meaning with everything that I have on my chart. And then eventually it becomes clearer in your head and you're no longer driven by impulses and nonsense behaviors, but rather you're driven by an objective reading of data in front of you. And for me, this is more data science than anything. It is not connected to my emotions. You know, it is literally just, where are we? What time of day it is? What do I expect from this area, right? Shay Hughes says, well, when you say when we're in COMEX, does that mean NY Open? No, so COMEX opens an hour before New York. So it's actually earlier. New York Open is obviously 8:30 a.m. Central. I don't know what part of the world you're in. Might help if you tell me, so we can talk. Yeah, and then it basically starts to finish the initial balance just at New York, just as New York opens, right? And then you might actually find an earlier trade in copper, platinum, or GC, even silver if you trade that. But I think it's too large for these accounts. So yeah. So hopefully this class will, make you understand a little bit more why I have all of these lines and what the hell she's talking about. Now, I will say that in the mornings I am a little bit sleepy and my decision making is a little bit sketchy up until about 3-4 hours into the day. I am a nighttime person, or former nighttime person. I'm Granny D these days. But my brain just naturally is not able to function particularly well. And then mix in the fact that we don't have DAX yet, which I know very well. So I'm just like, oh God, I need to have a look at gold now. So yeah, this class is a nice way for me to wake up, and also a good way for you guys to get a bit more knowledge. I know everybody's already said thank you. But yeah, if you've got any questions, let's spend the next sort of few minutes going through it. Black Mamba says, DAX is exploding! Yes, thank you. I can see, not blind. You remind me of one of my former risk managers. He liked to go into the bathrooms and around 10 a.m. and then come back, and you can guess what he was doing there, because after that visit to the bathroom, he would go, Euro, new lows! just imagine, there's probably about 20 people in the office, and everyone's pretty quiet. We have our ears in ears and stuff, listening to what's happening, and suddenly this boomy voice is like, Euro, new lows! And you're like, what? So yeah, I can see. Yeah. So the problem with DAX exploding is that that's dangerous, right? I don't have any desire to get involved in some insane moves that are way outside of my plan. So let's have a look at DAX. Let's see in this same thing. So I have very similar levels on here. Let's see where we are. So let's start on the weekly. Now, a lot of these things will be plotted automatically already. Let me remove my trade from the other day, because that's just a marker and it's a bit disruptive. So what do we have? We created a bit of a speed bump and went higher. On the weekly, all-time highs. What's happening on the daily chart? Daily chart tried to consolidate, but look, it didn't create a swing away from it. It pushed higher. So telling us that, yeah, there's some buyers here. Are we making another high? Not yet. Will we? I don't know. I can see the same chart as you. 4-hour chart. Profile from 4 weeks tells me that we're far away from the weekly POC. So 4 weeks worth POC is all the way down to 22.57. So I would say this could be a potential for maybe some shorts, maybe, just maybe, but let's see what the average ranges are doing. We have reached the average daily range high from a full 24-hour session. And where is our London-related one? So where was it is the better question. Right, so the average session high was also here. This is a decision point. Let's see what they want to do with it. Would I say that DAX is exploding? I mean, it's a big volatile. Look, DAX VIX is increased, right? So with that, we would expect to see an increase of general market moves. So what do I want to do with this? If I'm looking for longs, I will be looking for a test of VWAP, because it likes to do that. We also have a little bit of a high volume node in here. Not too big, but it might be good enough if this is a really strong move and we're shooting for all-time highs. Or if they continue to distribute and they give me a chance. Now, do note that we have a strong supply, even on a 4-hour chart, that we've just tested. And right now we're just consolidating around this area. Let me see what we have in the options. The option chain. The option chain. Okay, so we have high volume levels around here. If we go above this, now the high volume level means that the market makers might have to go into a gamma flip. So the exposure will flip from one market state to the other. And this could still go pretty crazy, right? So because of that, I would be more inclined to look for pullbacks and then a jump. If you look at how the market moved for London, it actually created a new intraday demand that is kind of ballpark. Initial balance high, VWAP, 9 EMA, and the edge of the demand all wrapped up into the same area. So right now, like if I get a test of this in the next sort of hour or so, I might be inclined to run along from VWAP on DAX. That is one, rather than fish for shorts, because it's a little bit tricky when the market is moved so violently and relentlessly. Upside. So for now, until this changes, if if we bounce from VWAP, that would be very good. I would be probably aiming for the all-time highs at that point, so it would be a trade that I would keep longer. But if we break down through VWAP, and if we go all the way down, rotate through this whole thing, I might want to fish for longs lower down. So let's see where the New York value is, because that is becoming more relevant. So New York value high is currently at 22,755. We do have a gamma wall projected from the ES at 22,764, which is around about the same area. So from a swing perspective, I would be looking at this edge over here to bring me some more longs. The danger there is that we actually do go down all the way to the volume POC. But value highs are very reactive. So yeah, wouldn't be fishing for shorts unless we actually get a very good move away from it first, and rotate and maybe come back to it. So, big moves away from those levels. Fishing for shorts just because we are at ADR high in the light of a super strong trend at all-time highs is one of those contextual things where just don't effing do it. If it works once in a blue moon, great, but that's how people lose their shirts. So there are exceptions. Like I said, the ADR getting reached and ignored is one condition. ADR getting reached and the price reverses away from it and creates a swing, that's another thing, okay? DAX, equities in general, they have a strong upward bias, always a bid to them, or on most days, statistically. So when you see these sort of things happen, and when they reach these levels pretty quickly, there's a time component there as well. So time-wise, when we reach the ADR too quickly in the day, that can also tell you that we might be looking at an outlier day. So that's what I've got on DAX. Right now, no setup. Despite DAX exploding, I wouldn't say that it's exploding. Looking at my levels, this is still a normal day, right? And my stop loss would be where? My stop loss would be probably about 55 to 60 ticks in light of the movement size that we've had generally. So it's over, right now it's over 500 ticks for the day. But ADR as it stands is 435 ticks. So that's a massive move. Therefore, I wouldn't be skimping on stops. The only way that I would maybe lower my stop size would be to enter with a 55 tick, then wait for a drawdown, then add into it, sort of DCA into it. That would reduce my stop, but still maintaining the maximum default position size. Otherwise, I would not be starting positions on full size, and then that would be it. Now, my stops, that's another lecture. In general, I look at the microstructures, but as a whole, I try to keep my stops away from round numbers, which means And I can't tell you that right now because I don't know, right? I would never enter a trade on a limit order. I don't do that. I always get involved once we're there and once I see whether the market wants to do something. So let's say that we get to VWAP and I look for a reversal and I managed to get in somewhere around 23.045 or 0.50. Using a 55 tick stop would mean that my stop would be right around 23,000. I don't like that. So what I would try to do is maybe use a small entry with an even wider stop and then look for a drawdown. There's always wiggle room. There's always some heat that we will take, even in, a day where it just keeps going up, up, and up. There are very few days where you won't take any heat on DAX in particular because it's not that crazy. There's always opportunities. So just by looking at how this demand here is, so if we take this as a rally-based rally, I would probably aim to get involved somewhere nearer 23,000 and then aim to put my stop below that area. But again, it all depends on the structure and what we have at the time. I wouldn't be able to tell you that right now because for that I use, let's go to the final part of my little methodology. So this is where I would use a microstructure on something like a 2-minute chart or a 100-tick chart. And then first and foremost, I would be looking at where the highs and the lows are and whether we're making lower highs and lower lows. Like for now, on gold, we had one liquidity grab, but still made a lower low. It moved away from it, made a lower high. So therefore, all of that tells me that this is a little bit bearish right now. VWAP is still defending here. So again, bad trade location. So if I wanted to run shorts, I would be looking to run shorts somewhere from up here. If I was looking to run longs, this microstructure is not telling me that. So let's say that we do get up here. Where would my stop be? Away from the round numbers. So it would be somewhere 31.5, 33.5 if we get all the way up here. So smash Asia high again, reverse. Or if we go much lower and then we get down here, I will be looking for the same thing. So let's imagine that we're at average session range low here. If I'm really looking for longs, I don't want to see this. So this would be just a scalp. It would be a liquidity grab, back to the middle, done. Very different outlook. But let's imagine that this low didn't happen and we actually created a higher low. Let's say we create a higher low at VWAP and it goes higher. Where would my stop be? Below 29.25. So 23 would be a good area. Even better, if we were at 29.20, so then you can use the stops at 29.17. But basically just sticking away from 5s and 0s. That is the whole point. That is my primary thing that I look for with my stops. Shay Hughes says, Dee, would you consider trading the VAC range as a good strategy? No! So when you're inside value, trading value high and value low is some sort of a weird version of support and resistance is not how it's done. Market makers will go over those levels, sometimes quite a bit over those levels, and then reverse. And maybe in equities, like if you are inside value, you get to value low, and then you're looking for longs. Because of the bid to those markets, that would be a good thing. But generally looking for larger swings inside, while the market is inside balance, inside value, it's just, there's no imbalance. Until that changes, until you're outside of that, you can look for larger swings. This is why when we're inside value, I look for scalps. I will look for scalps. I will not be looking for swings until such time that we unequivocally reject value, okay? When we reject value and we don't have any wicks to the opposite side to tell me that there's like the opposite party turning up, I don't chase swings. So immediately, markets imbalance, we're not chasing swings. We flip to the range bound strategy. So we match the strategy of the day with whatever we have at the moment. If that changes, you flip. You have another hyper for breakout strategy. It's like, okay, we've gone above value quite confidently. There's nobody selling this. Let's go. You can then use the initial balance high to get in. You don't have to use value. But yeah, there are ways to position yourself. However, bigger swings and markets imbalance, you don't have the imbalance. What is imbalance? Trend. Okay? If you don't have an imbalance on the day, there likely won't be no trend, right? 60% of the time, when the market opens inside value, it remains range bound. 60% of the time. So if you're constantly looking for bigger swings from support, resistance, and using value high, value low, that is not how value is to be used. When you're outside of value, you can use the outer edge of value for, like, let's say you open above, then you go down to value high, that can be support. But when you're below it and you're already kind of inside value, kicking around, having margaritas, just everybody doesn't care about taking it anywhere else, market makers will take it outside of value, then back inside. So it just, it doesn't quite work that way. So expect overshots of the value high, value low, then a return. And they will usually do that with some sort of GEX levels that are in and around there. If I was to look at it today, if they go higher, we only have GEX 1 and everything much higher up at 950 on gold. So, they could go all the way up there and then smash it down. Or if they decide to go below value, you have the calls up here. You have the gamma wall at 915. So I wouldn't expect value to work. Therefore, you have a whole 30 ticks where you can get caught up trying to get long around value low when you have a perfectly good area further down. So yeah. But even so, I wouldn't be looking for a bigger swing. I would just be looking for the middle of the range on those days. I do not look for big swings when the market looks like this. It's an inappropriate strategy, okay? All right, let's take one more question, and then I'm going to bail because today I have to manage my time because I'm going to be on Back to the Futures at 1 p.m. Central, which is 7 p.m. my time. So it's going to be a long day for me. Paul H., hit the like. Yes, please hit the like if you found value in anything that I've been yapping on about here. Show some support. Click the like, click subscribe. And to do an Andre impression. Real traders, real P&Ls, let's go! But yeah, let's have a look at Paul's question. If you had time, looking at copper, I see on the daily the area of supply, but on a 4-hour not so much. Does this mean a trend higher? Yeah, I'm bullish on the metals. Yesterday I did run a swing short on copper, but it's just not, it's not playing ball. So let's go through the quick analysis here. If we look at how many times the supply was tested, this is all from yesterday, so let me just clean it up. If we look at the supply from previous weeks and stuff, it's been tested many times. 1, 2, 3. This is a 4th test, and they're just ignoring it. There might be some opportunities for like smaller shorts intraday. And the fact that everything has gone absolutely insane for London, it could mean that they reverse it because it's such a big move. But I wouldn't expect that to happen until we get up to like closer to 84.60. So that's where the next area from a 4-hour chart is located. So 84.60 is up here. So literally close to this wick, but even that I would need to see what they want to do with this because this is a big move. It's moved 500 ticks. I don't know whether there was like news about tariffs or something. It's usually something to do with that. Last time they mentioned the T word, copper went absolutely insane. So let's see, financial juice. Canadian ambassador. Canada requests WTO consultations with United States on unjustified tariffs. VAT, boo. Guys, we've been dealing with VAT for like, how long, Paul? Like, how long have we had the value-added tax? A long time. Like, everything is VAT and tariffs over here. That's why you can't get rich. They're just like taking your money everywhere. 40% tax on high earners and VAT. And I made a mistake actually paying myself via dividends a few years back, thinking that dividends are only taxed at 10%. Yeah, up to 60K. After 60K, they were taxed 40%, exactly like your personal income tax. So I was like, well, that was useless. And thank you, accountants, for telling me. All right. So yeah, apart from that news that came out around 10:41, which was about 15 minutes ago, I don't see anything else that happened prior. Let me see overnight. Where are we? This was very early. Did we have anything last night? No, just Trump. Trump. Ukraine ready to sign minerals deal at any time. I don't know. Obviously, this was received by copper pretty crazily. So yeah, I would be looking for the focus to maybe fade. Not now. So later on, once we open COMEX. So in a few hours' time. Maybe let's see if they start to reverse it from somewhere. Let me have a look at the options, where that might be. Oh boy, I have no options here. I'm going to actually have to look at the intraday gamma flows, which I never really like doing. But yeah, we've smashed through all of the options right now. So I'm actually going to have to open Tasty Trade and see whether I can... look at the matrix. I haven't done that in a long time. But yeah, we smashed through all of the levels. That spells danger to me. So that means high probability that I'm going to sit on my hands today quite a bit. But yeah, let's see what COMEX brings, because this is not very clear, right? Very, very strong. We have some average session ranges that just got exhausted on London, but I wouldn't trust those. I really wouldn't. VWAP very, very far away. Everything else very, very far away. So this would be one of those times where even if we open, much lower, like, unless it really smashes down during the overlap, which, I doubt. I mean, ACH, right? But, it would have to smash below 463 in order to bring us into any sort of normality here in relation to value area. But yeah, I would like to get a trade well ahead of that. So, I don't know. I'm going to see what the initial balance does, and then just sit on my hands to see which side they want to extend it to. So yeah, my focus is probably going to be more on DAX this morning than anything else. Yeah, no trade for me on copper yet. Whenever I have a big outlier move, I'm very, very careful not to just jump in. There will be like noobs trading. It's moving, let's get in. It's like smash. Oh no, what happened? Dangerous market conditions, high volatility. That's what happened. Yeah. Costa says, requested my first payout, small, but it's my first try as well. Your tips of sizing down reduced my risks and allowed me for good days. Many thanks, Deeyana. Hey, I wish I had one of those Eddie soundboards, but I'm just going to have to give you a clap myself. Well done, Costa. And don't fret that it's like, oh, it's a small payout. I actually prefer that people do smaller payouts, like 20 to 30%, rather than, oh, I have 1,000, let's just smack in 500 and then be left with 500 to trade. So I applaud that, and well done. super glad for you. This is exactly why I preach to size down. It will lead to results. If you keep sizing up, you keep blowing up, you're constantly in a spin cycle of buying more and more combines, right? And then, I've got an XFA. Yeah, well, wow, I don't have an XFA. And then, yay, I passed my combine. Yay, everybody, passed my combine. I have an XFA. Well, I lost the XFA. So it's like, let's stop doing that cycle. So, size down. You're not in a rush. You don't have a trade to catch. My tattoo on my forearm says, haste makes waste in my mother tongue Serbian. So it's like, just size down. Be diligent. Payouts will come as a result of a good process, not the other way around. If you YOLO, if you size up, if you try and get there quickly, all you're going to create is rubbish, okay? All right, guys, that is it. We are out of time. You will see me later on for Back to the Futures. I will see what Coach Ray's schedule is like. Because, again, if he's quite busy due to some of the team being off on a retreat, so maybe they roped him to, do more stuff. So I will get in touch with him. Next week, I'm actually talking to Coach Robert from the coach of Technical Titans to come on because he is a nighttime person, and apparently he pops in, he lurks every time I'm doing these sessions. So I'm going to see if I can get him on as well. It would be awesome to have Robert. I love Robert's outlook. He's so super energetic. He's also a bodybuilder. It's like we have a lot of things in common. We're both a bit crazy. We're both a bit nerdy. So yeah, we should have some guests very soon. But until then, let's take it slow. It is Wednesday. Is it Wednesday? It is Wednesday. Okay, let's put the Eurex upvote as well and a couple of links. Okay, so where is Eurex link? There it is. If you want to bring Eurex a little bit quicker and show your support that we need Eurex, we need DAX because of what's happening, because it's such a great drama-free movement. This is the link, right? It's a direct link to the same area as you get when you click into here and you go into feature voting, exactly the same, but I've just dragged it out from the actual sim to funded website, but it's basically the same thing. So upvote Eurex, guys. Maybe, just maybe, we're going to be, maybe we're going to be having Eurex products soon. Please. Yeah, I don't know. Don't ask me when it's going to come. So the best thing that we can do is just upvote that post and then see what happens. Apparently they're working on it. So, every time I come on and moan about it, JD is like, we're working on it. It's like, well, good. When DAX? Let me grab a Topstep Discord link for you. What am I looking for? Overnight segments. There it is. I'm not going to post the payout club thing because a lot of us are in Europe. They don't send it out to Europe, so there's very little point. Tampa Trades voted. Thank you. Spread it around, like if you're in any sort of Discord, other groups and stuff as well. Just tell them if they're with Topstep, tell them to upvote. Now here's our Discord group where we have over 100,000 people. You will find all of our lovely coaches in there. Now that number continues to grow as the channel grows as well. So if you're not already a part of the Discord community, come on in. Now inside our Discord, you're going to find like-minded traders. You're going to find us coaches. And, quick help if you need it from the ambassadors as well, because we have ambassadors that are always in there ready to lend a hand. So cheers to 100K and here's to 100K more, right? Let's keep growing. If you want to come and join us on the main broadcast, you will need to fill out, well, you don't need to, but if you want to, you can fill out a casting form that I'm going to post in a second. There we go. Doesn't matter if you're just at the start of your journey or you're on the live board or you're just jabbing away in the combine. If you want to mix it up with us, with the crew, fill out the form and put your name in the ring, and then somebody will reach out to you to discuss your future appearance in Topstep TV. Anytime. Anyways, thank you for hanging. Press the like, press subscribe. Oh, I'm terrible with the audience interaction stuff, but I'm trying. It's been many years on YouTube. I still don't know how to do it properly. I think Andre does it the best. Click like, click subscribe. Real traders, real P&L, Topstep TV, the London session. I will see you later. Take care.